This is how it is on my blog.
You want to do it?
No, I did that one recently for something. These are the same lines. These are using candlestick. That's the line. You just draw a line and it gives you an idea. And look at this is here. This is 2010, 2010, 2011, 2012. You see how 2012 went high. Let's speak and answer this. Speak to him. Tell him and so
I see it's coming down now.
It's coming down, right? Let me tell you why I'm scared. I'm scared of something. Scared of something. If you know, I said your chart looks like it's a painting to me, and this is one reason I'm scared. I'm scared first, like when market was dropping. Don't let me use this. Let me use from here. This high, when it came to this extent, right? That's how long does it drop? 28,000 points. It dropped to about 25,900, you know, and now lower. In fact, it did a lower trend till about 22,000 points. This was in 2010. Yes, the next one, and this is why I'm scared. You see this circle I drew here is acting as a support line. The next one is acting as a resistance line. This one now is acting as support. That's why I've been writing that the market, I call it the bulls. This is their last line of defense. They have to hold it. That's why market have been trading. You will see minimal gains and losses these days. It's not going to, they are fighting to take control, because if we lose this line, it's going to be strong. It's a fight, and I've said it, at any point I got to that peak, it's always a downward trend. It's always downward. So market needs to hold here, it needs to hold. I'm looking at it on a daily time frame. You can see it. This was, you see the bull trend, right? This was the beginning of a bear trend. It did not make a new high. You see, and what we've been doing, trading lower highs, lower highs, lower highs, lower highs. I've drawn that line. I've just drawn my trend line there. And what is it doing now is finding support at, let's say, 26,200. That's what the market is trading. The charts are showing it. That is the support. Market needs to fight. So what's going to happen is it's going to consolidate within that prey, and I pray it breaks out. It breaks out to the upward trend. Because anything below here, I cannot grant. So you have to be cautious now. That is, I think that's the word. Caution. Okay, and
excuse me.
Yep.
Like you said, caution, but also grab on trend the normal January to March. Yeah, I guess the years already have that market still looks flat till January. January to March we see a good upside. That's where I can base with that. I still think that fitting the ambition these days,
Yes.
will still break out to about 140.
You see, what you have to say is that, you see, the index, I use the index as the barometer of the whole market. I analyze the index. The index, those are higher technical analysis. If I want to chart UB again, I will minus 560 minus 452.
How much is that?
Calculate 550 for 462.
Teach them that.
Worst case scenario. Worst case scenario for UBA, 3 this thing. Because UBA have lost one thing. This trend line. You see this low, this low, this low. Can you see it? That trend line. Here, here, here. This was how I started the rally. Yes, this was how I started. See, here, 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 here. So you see, when it fell down, it now acted as resistance down. So the new support now is within here. So if you are training trend line, I don't have any business with QB for now.
See your Guinness.
So the example I gave you, you are training the trend line by here. 271 is supposed to be out of.
Hey, next, I'd like to watch next.
IHS.
Next,
You need to.
IHS.
When we you see our left,
IHS.
you are just talking about your fastener stocks. Support and resistance line. You understand? Support and resistance line. I said every stock. Every stock has a support and a resistance line. If there's any stock, this is Babco. If you want any stock for me to analyze, well, I'll give you. I can tell you the support and resistance line. Do you have anyone in mind?
Let's
After that, we'll look at Starling back.
Support for now is 570 because this was the beginning. And this is the resistance line for next week. That was the high.
Starling back.
Sterling. This is the resistance line. That's here. Within this range. Decide from here. At least let's just look at even within here.
That's cool.
These are resistance. It's acting as support here and acting as resistance here. So the support is now the resistance line.
That's cool.
And this is the new support line because it made this low. That was here.
1.4.
So that's the. But see, in candlestick, because that was going to hammer. Yes, that's the hammer formation. Now everything is there.
That's
You
cool.
see, that hammer is that this was the low of the day, but it closed here. You see, it looks at the shape of the hammer. You know, it's been doing a downtrend. Then it went low here, but it closed here, and it went up, and that's the resistance line.
Is there possibility of you getting to where it's where?
What?
It
can. You see, now I'm trying to say that there are a lot of things you need to look at. Your trend lines, what it is doing now is it has broken at least one line here. I can draw this one. That's here. It was doing here until he found this used to be resistance, is now the support, and this is now a resistance. So sometimes we call this one the broadening wedge. He's trending here until he finds the next, either it's going to break out or going to come down.
That's cool.
So that's another idea. 5something and here 598 until it breaks out.
There are some trends that individual stock is forming.
Yeah.
Possible. You're sharing this to begin.
Yes.
So how can somebody relate to them as a
That a stock is.
The stock is dropping.
Yes.
But you're sharing this is gaining. So how can somebody match it together and take a decision?
Check the trend. You know, there are some stocks. You see, every stock has, it now belongs to its own index. Either 30, banking, insurance, and then you have to check that sector, what that sector is doing. You understand? And some stocks will go up, but other stocks will bring it down. Like the whole market can come down. Nestle, MBL, Guinness can go up. Or Dangote Cement. The whole market is that they see all the market up. You understand? But again, you have to look at your moving averages. What are those stocks doing? Are they a buy or a sell signal? Really, I've made this easy. If you look at your trend line, your moving averages, you know what stocks to really buy and sell. For number one, you have to check what stocks should I buy. You look at, apart from looking at the trend, you look at, do these stocks do high and low? Are they trending? Is it a trending stock? Is it a trending stock? You see, I says, this is the kind of stock you should buy that does ups and downs. You don't buy stocks like this. This one is not favorable because it's trading below it. Like, look at that spike. Then some people trade Nestle for the big boys. Because if you look at the historical for Nestle those days, look at Nestle. You can't trade this if you want to get money. You can't. So you have to look for stocks that trend.
So which one are you recommending for now?
Men looking at that, I'm saying, when you look at your charts, right? You may look at your chart. You can see the high and lows. You can see that's how to make money, ups and downs. You don't trend what is just flat. You make money, you just be there. So that's what you're supposed to do. You're supposed to look at the stock that is trending up and high.
You should don't buy 50 common stocks.
Depending if you want to wait.
All the future of the insurance industry.
No.
The next one we are going to they call it the Dow story. The Dow story is really related, I won't say only international market. The Dow story was actually invented by Dow Jones. That's what the US market uses now. They say Dow, the Dow 30, it was from his name. It was the founder of the Dow Jones theory. And what Dow Jones said, before we've been saying about it, markets have trends, they have faces. And that's what Dow Jones was really talking about. And he said most consider the father of TA to be Dow Jones, that's Charles Dow, the founder of Dow Jones and Company, which publishes the Wall Street Journal. Around 1900, he wrote a series of papers. We looked at the way prices of the Dow, that's the DJI, average and transport index move. After analyzing indexes, he outlined his belief that markets tend to move in similar ways over time. These papers, which are expanded on by other traders in the years that followed, became known as the Dow theory. And despite the fact that it was done like over 100 years ago, it focused on stock indexes in its writings, but the basic principles are relevant to any market. Dow is broken into 6 basic tenets. In this lesson, we are going to take a look at 3 and then finish up the conversation. Dow in the next lessons. So the first thing we look at, as I've explained to you, uptrend. I start with your trend lines. That's the market started on the uptrend, which we believe which are defined as a time when successive rallies in the security price closes at levels higher than those achieved in previous rallies, and when lows occur at these levels higher than previous lows. So that what we're saying is going to be saying about your higher lows and your higher highs. And how did it start, right? We now said that the next one is downtrend, which are defined as when the market makes successful lower lows and lower highs. Is that what we say this morning? And corrections, market you make for correction. Because if we ask ourselves, the rally that happened in August, the recent rally
From June to
this June,
September or October.
it's too much. It was too much, and that's why we're having. So what? All these things you are seeing now are more of corrections. The market went too high, and that time I told them the market was like you are driving to Ibadan, and your car, you know your car is overheating. You know, if you have a car that's overheating, you pray not to be in traffic. You know what happens. So the market was on a smooth ride, going to Ibadan, praying that there will be no traffic. Unless it was coming from Ibadan to Lagos, no traffic. They now got to Third Mainland Bridge. The market was too high. In a period of from June till about it moved about 6,000 points or so. It was too much. These are the now you got about 33%. And in any market, in fact, a good market per year between 5 to 15% maximum. I want in 2 months.
That was when the pandemic issue.
Yes, now. Okay, why are they not making this one now? It's too high. You understand?
You can't afford it.
No, I'm just telling you. You know, so the market went too high and is doing that correction. Fine. As I told you, I don't care. I traded my moving averages and I said, okay, from here as a short term, I'm out. I'm waiting for the next.
Momoh, what kind of correction are we now experiencing? Is it a full bearish correction or a bullish correction? What would you call it?
Depending on your time frame again. Do you know I escape all these questions? Because you have to look at what time frame you want to trade. I trade short term. I trade short, so I'm out.
There's no correction for you.
For me, I don't care. When it goes above 8, I buy above the red, I buy again. That's I'm looking at. You see, let me tell people why I said I'm concerned. You know, from the earlier chart I showed you, I said anytime two moving averages are getting together, be careful. Anything can happen. If these two touches there might be that's down because see what is happening now is that to make it easy, you see this guy is going up. The red is not coming down. You know the red is coming down, so you know the market is coming down. So we ask yourself, is this correction enough? Everybody shouting now. Why is it not going up? When it was going up here, why didn't it go? Now it's coming down, everybody's complaining. So that's why I'm asking you, if any of this, if this guy should touch here now, you might have some serious, look at them. Anytime there's a crossover, you see what happens. You see, went up, you see that it crossed down. So that's why the market, what the market is doing now, the market is consolidating. It's fight between the bulls and bears. Who takes control? That's what's happening in the market. I don't want to be caught in crossfire. So when you now sell, they are waiting, they are buying. When they see they have enough volume, they start the next trend.
Who are the they?
The market, the
Big
big boys, they make money all the time. So you that you have those little money, it's just for you to know the trend. You follow the trend. You follow the wave. So that's just what's happening. You follow the wave. And you see, you accumulate. You see, then the public, from what Dow said, the excess is what I'm seeing here. This was excess. Really, because, I mean, from June till this week, it was excess. That rally was too much. You know, people like up rallies, but they don't like down rallies. And then at any point in time, you see, even me, I like, when I sell, I want the market to come down because I want to buy again. You know, so that is how everything works. You have to know, sorry I can be negative. I just want, like, even the market now, for once I'm scared of that line in which it is. And I keep writing up on my blog, Bulls, this is your last line of defense. You have to hold it. Because I have followership. So I'm writing to defend the market. Because anything drop, you just see all of a sudden, you just see, and next thing, you think your fault. The next thing, you just see, BAM! You won't know what hit you. That is it. It has crossed that trend line, and everybody starts to sell. You won't know what's happening.
Does it mean that the big guys are also being taken analysis, but they are selling financial analysis to the trend?
No, they too know what they're doing. So if I want stock, the best time to buy stock for a big, if I'm doing bulk trading, is when the market is down. Because that's when you can get stocks. You cannot get when it's going up. So that's it. If you want to sustain that market, all they have to do is push up down with this cement. Or they have stocks to sell. They have volume to sell. And they don't want the price to fall because they know everybody to start selling. They hold it up. They hold the index. If you want to know a real bull market in this market, is the banking sector because it's the most capitalized. For a stock to go up, First Bank or you know you will spend money to hold it up. But now with MBL, the limit is 10,000 units. I do 10,000 of MBL at 135. Now 1.3 million. I'll move the index up because it's heavyweight. So you see, when you see all those things going up, they too want to sell, but they don't want that panic because if everybody start selling, so they try to hold the price, and they'll be getting out gradually.
That's what they're doing right now.
They'll be getting out gradually. You understand? So that is this guy will give you an idea that I think I need to get out of the market. You know, so they started the rally, they accumulated here. They started the rally by accumulating here, and you can see there, and that's where we are now. The market is still is form of accumulation. Either buy or sell. Then the next thing, the excesses. You see these excesses, they are still there, but you will not see them on top, but you will be seeing them under volume, putting volume. You see 10 million under. They are not on top because they don't give you. They are getting out. They are selling, and that's this is then. Then they are out. They are in cash. You are in stock. So this is a table of without theory, conviction, greed and fear. That timeline. Then hope, apprehension, bio. They are not yet in surrender. They are hoping. Now I'm telling you the doubt theory. From up to down. This is, like I said, this is IHS. So you are really hope or apprehension or there's some people when they just sell, I let them just take my losses and go. The market starts going up. There's something here that has happened to even myself. This chart. Number one, you are talking to yourself. At this price, this price is going up. Let's watch the market. Number two, the trend is holding by the next consolidation. Then you missed it. Number three, down, missed it, the consolidation. But if I wait any longer, I won't profit from this trend. Let's buy. You now buy. Then you got here, you say, good thing I didn't wait. Then number five, I'll use this correction, increase my position. Number six, brilliant, at this price, let's double it. Ouch, as soon as it gets back up, I'm selling out. Number eight, I don't believe it's down to 8 bottom. Okay, it's it opposite bottom. Then you now go down. Good thing I sold everything. Then it goes up. You say, I'm going. You see, it's going to again. Anyway, they say he came and say, told you so. He's happy that you have sold. Then, bam, it starts going up. What the hell? Then they see more crazies who are going to that clearance, narrating. This is it. I knew this was going to happen. Then number 10, I'll buy again if it's cheaper. So you will see some investors selling here, and they will be buying here. That low and low, as you said, 5%. If you know your loss is 5%, take it and go. But see, if I'm to put my moving average on all these things now, you know, I bet you my moving average would have been around here. Any short term, I'm out. I'll wait and buy. It's not everything. Technical analysis is not the holy grail, but it's a guide. It guides you.
What ideal moving average would you advise?
For me, depending on what you want.
For a million 10 person.
For me, not 10.
For a short term person.
Short term person, you use 15 to 30. Yeah, depending, you see there are different time frames. I use 5
There are some times
because I'm on the floor of the exchange.
that's the
Yes, I use 5. Yeah.
There are some times that they stock like which one will I use last time? Like say fidelity.
Yeah. That is doing and it's consolidating.
But if you cross your 15 days average,
It's wait now, I'll tell you. It's consolidating within
Fidelity diagram you are showing me one of the sources 2 weeks ago. Yeah, it is.
who introduced the decimal number system to Europe in the 1200s. All also invented a number of series that was found all throughout the universe. In nature, cells, economics, and life, the numbers are found by adding the last 2 numbers in a sequence together. For example, 1 plus 1 equals to 2, 1 plus 2 equals to 3, until we get. Dividing the numbers by its predecessor, that is 89 to 55, gives us the golden mean for 1.618. To break it down in TA, traders, you see, one thing about trend line is that apart from trend line, if you want to have an idea, okay, where is this stock going to go, either up or down, we use what they call Fibonacci numbers. And from my software, let me read. Traders use Fibonacci as potential support and resistance areas to set profit targets. Again, since so many traders are watching these levels and placing buy and sell orders to take profit, these 2 steps will work due to self-fulfilling expectations. Now, this is our NSC ASI. I want to draw a Fibonacci line. Okay, this thing has been consolidating. Apart from what this trend line is showing, where are these stocks going to? That's why I wish you got. This is Fibonacci. Let me use one that doesn't have Fibonacci. I want to draw it.
Yeah, be the artist in you.
This was our Fibonacci. This because we are seeing double these are good support areas. Then distance.
The whole bull market recent one.
Can you see? You can see why market is stalling at a Fibonacci line. That's the Fibonacci line.
Which one?
This one.
Why did you start from July when the bull market started?
No, you have to look for double bottoms. Okay, on Fibonacci. You understand? So what is happening here is that these are series of support lines. Anytime a trend, anytime a stock goes above this line, it's always a good trend. Anytime if Fidelity sells crosses 174, don't wait. It's going down. So these lines act more like resistance and support areas. That's why for now it's trading between the 38.2%. If I say okay, if it dropped below 206, I'll be putting my next buy at 188. It's just a guide. It guides you on the next support level is going to reach or the next resistance level is going to reach. Zenith, Fibonacci, this low to this high. So, okay, worst case scenario, where is Zenith going to be? 1640. I'm not giving you what Fibonacci does. It gives you worst case scenario for now. What are the next levels these stocks are going to hit as buying or selling areas? And the medium, this guy is always the medium, like the 50%. You can see when this stock was going up, this 861 acted as resistance and support here. 50 acted as resistance, acted as support here. It went up. Now this will be the next support line. Worst case, we'll be seeing another one here. Well, if you see Zenith below 1520, it's a full sell. It's going to blow. So These lines act as guidelines. You know, they are ratios. They act as guidelines where market will be trending. Japan. I have to take a double low and high. The 50s, the 61. You don't see anything below 61 is a sell. Anything below. So Japan, goodbye within 52 kobo and 50 kobo. Worst case scenario for goodbye. So really, that Fibonacci is more a
can you do that on person?
complex.
See how
What?
that come out of testing.
Fitting. And the person I want fitting
No,
now.
not just do it and say because it was really. Let me see how well I did.
Fitting. Then, Elliott wave theory. Trading Fibonacci and Dow theory. One step further was Ralph Elliott, an accountant who became ill and bedridden late in his life and turned his attention to the stock market. He formed a theory that consisted of five moves or waves, upward and 3 waves down. The theory followed closely what Charles Dow had discovered nearly 50 years ago. However, Elliott wave added the Fibonacci percentages to his analysis, allowing him to predict future turning points in the stock market based on the price action. Now, I want to go back to our index. This is our index. Market moves in waves. And depending on how we want to look at it, I can, apart from this rallies wave 1, 2, high. As I said before, I said the day you discover your first lower high, that is a bear market. And not the bear, that's it shows that the bulls are getting tired.
Okay.
Just like from every trend I've been analyzing this morning, this was the peak of the market. And now what you are seeing, we are beginning to see, yes, thank you. Yes. So this is what Elliott wave is about. Prices move in waves. Uptrend, higher highs, higher lows, higher highs, until it gets to the peak. The peak, you always know the peak when it makes the maximum high for that day. From how I've been looking at the market, I've been analyzing the market, and the market is having its own wave pattern. Market is its own wave pattern now, which is this. NFC. This was the peak.